Hey, everybody. It is Wednesday. It is time for the weekly live. I'm Kaylee. I'm the teacher of finances as well as the founder of Financial Peace for Blended Families. Tonight, we're going to hop on here and we're going to talk about coverage for children, why they need it, why they don't need it, how do you use it, what's it for, all the ins and outs of it. I'm gonna try to keep it brief because, like always, it's time for dinner and everything else. My husband is actually home tonight, so that's nice because he can help with dinner. But if you're catching this live, if you'll drop a hashtag live in the comments, if you're catching it after I go off of the live event, if you can just hashtag rewatch in the comments at any time in this presentation or in this video presentation. I feel like I'm in teacher mode. That's always the topic or term I use. But at any time, if you have any value that you find in this, if you'll drop value in the comments, I would love the feedback. It just helps me gauge what you guys like to learn about and what information I need to bring to you. So if you're joining me, thank you. Thank you, Ashley. I appreciate it. So we're going to talk about why kids possibly need coverage too tonight. So the chances of a child dying, that's not something you really think of. It's a low chance. So the funeral costs are not always the reason why parents look at buying life insurance for a child. But if it does happen, a life insurance policy is going to provide the funds to help cover those final expenses. Honestly, though, the reason I'm bringing it to your attention tonight is not because of final expenses or anything like that. It's just because of the benefits that come with it and protecting your child at a young age. And I'm bringing this to you tonight because it's super close to my heart. I have a cousin that's 24 years old, and he was just diagnosed with Hodgkin's cancer last week. We're not family wise, we are kind of distant cousins, but he is actually one of my first cousins, and he was just diagnosed with that. With that being said, of course, they had nothing in place for him. They don't have any type of cancer coverage, anything, and they had to put a GoFundMe up. And seeing GoFundMe's on social media breaks my heart. We're in the Wichita Falls area, and he is having to travel to Dallas for his therapies and all the doctor's appointments, and the parents are asking for money because they don't have the funds to travel back and forth. And so it's very heartbreaking. And with that, that's why I was like, this week I'm talking about this in children. So if you have something in place for your kids and that were to happen, you can actually utilize living benefits off of certain types of policies. And so if you're a grandparent, a parent, a legal guardian, whatever it is, then you can take a policy out like that on your child. Some people think that buying it is going to be just the final protection, and it's not always that. You can use it for so many other things. So depending on your circumstances and needs and other reasons that you could possibly look at, you could also have other reasons to buy a policy aside from just the fact of them passing away unexpectedly at a young age. So your child's future insurability is important. And what I mean by that is if you take a policy out on your child at a young age, when they're healthy, one, it's going to be cheap. Two, now they have insurability. So most of the time, children's policies are going to be in a form of a whole life policy, which means their coverage is going to cover them the whole time of their life as long as their premiums are paid on the regular basis. Now, once that child reaches a certain age, you can get additional coverage regardless of their health or their occupation, because life insurance or insurance policies are based off your health, your age, and then sometimes even the occupation comes into play and causes you to not be able to get the coverage you want. So taking it out on them young allows them to have that opportunity to use it and have it available to them regardless of what they do in their life. So heaven, and I kind of talked about this, but heaven forbid something happens to your child, they get an illness, they become terminally, sick or whatever the case may be, then they may become uninsurable. So let's say they turn 25 and get diagnosed with lupus. Well, getting coverage for lupus is a lot harder than getting coverage for somebody with high blood pressure. Just kind of going into details of how underwriting works. If you were to take a policy out on them whenever they're 4 years old, now they have that insurability and they have that coverage at the age of 25. Again, you have to keep your premiums in place, but it's very, very affordable. And I'm going to go into that in just a second. Um, it also gives them the freedom to add extra. So I'm going to touch base on coverage amounts and things here in a second. And when we get to that, you may say, well, that's not a very high amount. But insuring them at a young age gives them that option to increase those amounts at a later time whenever their need to have more coverage, is necessary. So, locking in those lower premiums. So, generally speaking, the younger the insured person is, the cheaper their premiums are going to be. Age and health, I say that all the time. So, the younger they are, the cheaper it's going to be for you. Thanks, Ashley. I love it. I love the input. Insurance companies lock in those rates for policyholders at the time of their coverage, and they're not going to increase them over time. So, when we say whole life for a child, you lock in that rate and they get to keep that rate. So let's say you get it on your child and it's $10 a month. They could be 35 years old and still paying $10 a month because they have whole life coverage. It's amazing. I would love to have a $10 a month policy on myself, right? Super cheap. But so just locking in those prices to make sure that they have it. And I always tell customers, I always tell clients, families, anybody I'm talking to, that maybe you can only afford $10 a month right now, but you really want something that's you want that higher coverage, you just can't afford it. Well, life changes, you get a raise, whatever happens in your life, you can always increase it. The importance is doing something small, so then that way in the long term time, you can always increase it. But if you wait until they're sick or wait until something happens and you need it, now you're putting yourself in a bind. You're looking at higher rates. There's so many different things that go into it. So getting it while it's really cheap is amazing. Like, that's the best bet, right? That's the better way for me. I'm a bargain shopper. Another reason why you might be looking or thinking, well, can I use it for savings in the future? Absolutely, yes, you can. So whole life policies usually contain some sort of savings component, which is what we call the cash value. So if you hear somebody say, "Oh yeah, I talked to somebody the other day actually, and they said my mom went to France on a life insurance policy." I'm like, "That's cool." So they had a cash value component built into their life insurance policy, and children's whole life policies have that. Now, the cash grows over time. It's usually at a fixed rate, and it can be borrowed against or paid out if they surrender that policy. So depending on how the policy is, however you write the policy, the type of product that it is, and all of those different types of things determine the amount of cash accumulation. It can be a great alternative for savings for your children. And now you might say, well, I have a 529 plan. If you don't know what a 529 plan is, it's a college savings account that you can set up. There are all kinds of stipulations built in 529 plans. Typically, it has to be some sort of education. Doesn't have to be college necessarily. You can use it for trade school and things like that, but it has to be educational based, all right? Does every kid go to college? No. As much as parents, we want them to go get an education. We want them to go, further their knowledge in an area. Not every child does that. And so then you're stuck in this plan that has all of these certain stipulations on it. Thank you. I love it. But yeah, they don't all go to college. You just never know if they're going to go to college or not. And it's great to have the 529. I mean, I was going to go to college. I went to college and then I quit and then I went back and I went back and forth so many times. And so thinking of an alternative way to save for your children, maybe for college, maybe for a car, maybe for their wedding, maybe they get in trouble and you have to bail them out of jail. I mean, I don't know. I'm just saying life happens and the plans we expect for our kids don't always go the way that we expect them to. We can do everything we want or do everything perfectly the way it's supposed to be done, and they still don't do what we want them to do. They're kids, right? We all did it. We did it to our parents. Our kids are going to do it to us. And so the 529s are great, but you also have to think about the fact if they don't end up going to school. So now what? So if you were to take out some sort of a plan that had that cash accumulation in it and that cash buildup, you could utilize it for different things. With the 529s, you're also looking at if you don't use it for educational purposes and you decide to pull it for something else, now you're going to have all kinds of taxes and penalties and all kinds of different things that you're going to have to pay on top of it. So you're going to be losing money at the end of the day. If you do utilize a policy that has a savings component in it, you are not facing the risk of losing money because it's going to be in an account that's secured. It's going to have guaranteed growth. You're not going to lose a penny. There's a lot of benefits to putting it into more of a policy that has cash accumulation versus trying to do stocks, mutual funds, CDs, all of that stuff. When you do a whole life, or if you do like an index universal, I'm throwing all these terms out here, but you do a certain type of life insurance policy that has cash value, now you get to have a lot more of a broad concept of building money for them, savings with the compounded interest and all of those fun things. And you're not going to be facing the chance of losing money. So that's as far as savings. Now, some people may say, well, I've looked at whole life for my child. The death benefits are low, and that can be true. But there's more options than just a simple whole life. There, like I mentioned, there's index universals. You can do a universal life. There's all kinds of different things that you can do aside for a simple whole life. It really just depends on your circumstances. It depends on your budget. It depends on what your family needs at the time. And so maybe you're thinking, well, I can't afford a premium. There's no way I can afford that a premium. Like I mentioned earlier, typically children's life insurance policies are lower than what even an adult is expected to pay on your own premiums. So think of it like this. Would you rather to have a guaranteed policy in place to cover your child in the case of an emergency, tragedy, illness, whatever the case may be, versus not having anything in place and then being the family that has to set up the GoFundMe online and beg people to give you money? I prefer not to do a GoFundMe if I don't have to. And so that's why I felt like it's so important to bring this to everyone's attention and, draw attention on the fact that insuring your children is super cheap. So to give you an idea, depending on their age, it can cost us about as low as $10 a month. So for our 12-year-olds, you can get a universal life for $25 a month. It's $100,000 in coverage. And that's going to include a terminal illness. It's going to include stroke, heart. It's got all kinds of extra living benefits built into it. And so if that child gets cancer, you need the money to travel, you need the money for therapy, you need extra money for this, that, whatever it may be, you can actually use that from the policy. So, I mean, $25 a month is really not that expensive whenever you're looking at, oh yeah, exactly. That GoFundMe's, it makes me sick seeing them all the time. But $25 a month really is not, it's not that bad if you think about $100,000 in coverage and your children are guaranteed insurable. Universal lives have cash value. There's so many benefits to it. So how does it work? That's kind of the next question I thought of, is like most parents will say, well, how does that work exactly? So it's permanent. It provides them a death benefit. You can get the cash value. We've already talked about that. It can be purchased in one of two ways. You can do a whole life policy for your child, or they also have options to do riders on the parents. And so a rider is just an added benefit onto a policy. So you may hear the word living benefit rider or cancer rider. You may hear riders all the time in the insurance world. And so you can actually have a policy on yourself, a term or permanent, and then they have child riders. But with the riders, you have to remember, a lot of time there's going to be a stipulation on how long you can carry that child on your policy. And so you most of the time can keep them up to age 25, depending on the company. Sometimes it cuts off at 18. Let's say you have a rider for your children and heaven forbid something happened and they get sick. Now, when it's time to cut them off of your policy and they need something of their own, their premiums are going to be much higher because they had that sickness or they had that illness or they had something come up in their health. So if you can't afford policy on your child at the time, then of course throw the rider on there. It's usually a couple bucks a month, like $5 a month or something onto your life insurance policy. But if you can't afford it, then take it out on your kid, have their own policy, give them that guaranteed insurability. I'm in a bunch of different groups on Facebook. I'll go through and I read people's comments and what people are talking about. And I have seen so many young adults say how thankful they were that their parents actually put a policy on them as a child because they did. That's where the lupus thing came from. That's where I had that. I never thought of a person getting lupus at a young age and all of that stuff. And so there was a person on there talking about their experience, and had their family not taken out a whole life policy on them when they were young, they would have had extremely high rates later on in life because she was diagnosed with lupus at like the age of 23. So, just kind of a couple things that you can take into consideration when you're looking at what benefits best for my family and I. Death benefits typically in children's policies are about $50,000 or less. But again, you get that guaranteed insurability, and then certain times in their life. Thank you, Tori. Yes, it's so important. I wish my parents would have on me, honestly, but they didn't. And so here I am now doing it on myself. But, there's different times in your life that the children go through that they can increase that coverage if they get married. There's different stipulations where they can increase it, but they have that insurability, which is so, so important to get. You can transfer ownership of it. So maybe the grandparents take it out and the grandparents pass, that it can be transferred over to the parent. It can be transferred over to the child depending on their age. So there's a lot of flexibility in the whole life policies for children. Again, the premiums have to, I'm just going over a couple things I've already talked about, but I'm just reiterating it because I know I go fast. Keeping those policies, the premiums paid. If the premiums aren't paid, then of course you have the lapse and everything. Now, one thing that is nice, because like I mentioned, they're super super cheap. You a lot of the times have an option to do like a 10 pay, meaning you pay 10 premium payments. So the let's say 10 times $120, right? $120 over the course of a year if it's $10 a month. And you pay that over 10 years, it pays the policy up in full. So you have options to pay it in full. If you're a grandparent, or if you're a parent and you're getting that massive income tax return, right? Just pay your kids' policy up in full. Now they got it for the rest of their lives. You don't have to worry about it. They decide to increase coverage. Of course, you're going to have to pay a little bit more then, but you have so many options available, and locking in the prices on it when they're young. And then you can also do, if they need to convert it into something different, a new life policy, they have that option too. So when can you buy it? Children typically become eligible for coverage in between the ages of 14 days or 15 days old. Most companies allow about 14 to 15 days old. Good question. So majority of the time, Ashley, on the children's policies, they don't have any questions. Usually it's like two basic questions. It depends on the company. And so that's why I always put my link in the comments. I always put my link in the descriptions, because it's based on your particular child's situation. So what I do is I come in, I sit down with you, we talk about it. So if your child has autism, we can go in there and we can see which company covers it. Are there stipulations? Does it change matters? I'm contracted with 40 carriers, so therefore I don't have an exact answer for you, because every company is different, every policy is different. They all have different stipulations on what they accept and how they accept it. So that's a wonderful question to ask, though. It really just depends on the situation of the child and the company we're looking at. So keep going forward. Now, the next thing is, let's see, where was I at? Cutoff ages, we already talked about that. So here's an example that I came up with. So for Gerber Life, for example, I'm not contracted with Gerber Life. Their age, so their ceiling to be able to take out insurance on a child is 14. But Mutual of Omaha, which is a company I work with, they actually allow you to take it up to 17 on buying a whole life policy for children. So it really depends. It kind of goes back to the question Ashley asked. It really just depends on the situation of the child, the age, and the companies we're looking at. And so as an independent agent, which is why I went independent and not captive, is because I have access to so many different companies. And so there's not a time that I can't get coverage for people. I mean, I have guaranteed, and I have all kinds of different situations that I'm able to get coverage, even when people have had cancer and crazy illnesses and crazy things that you think that, oh, I've had somebody tell me, you will not give me covered. And I'm like, oh, let's watch. And we got them covered. And so there's tons and tons of different companies out there that are available to help you get the coverage that you need. So if you've ever been told that you're denied, please, please, please don't just let that set in your head and say, oh no, I can't get coverage, because like I mentioned, I can help you with that. And then how do you know which policy is right for your child? This is kind of piggybacking on everything I've already talked about, but this is where I come in. I have so many different companies that offer different options for you. Through a quick meeting, we just jump on Zoom. It takes about 30 minutes. I ask you a series of questions. I figure out your family dynamics and what's best fit for your family. Because life insurance, whether it's for you, your kids, your parents, doesn't matter who it's for. Life insurance is not a single product that works for everybody. Everybody's circumstances are different. Everybody has different dynamics. You never know what you're going to need. And so when people, like, this is my pet peeve coming out, you're getting to see the real me, but it drives me crazy when people say, well, I just want them numbers. Well, I can't give you the numbers unless I sit down and talk to you, because I have to know what's fit for you. It's not a generic one size fits all. Everybody's different. Your dynamics are different. There's so many things that come into play that you have to look at to make sure we get what's best for you. And that's my whole goal, is I want what's going to make you happy. And I want to do what's good for you. I don't want to do what's good for me. It's for you and your family. And you know what happens? Life happens. And when life happens, sometimes we have to modify, adjust, and recreate a plan. And so when you're working with an independent agent, you're working with somebody individually, you get that. Like, I get to be with you for life. I get to be with you and work with you. And so when your circumstances change, maybe you are a blended family and you ended up splitting up. And if that happens, now we got to go back and we have to look at your beneficiaries, and we have to do, we have to look at different things. Life happens. When life happens, you have to adjust, modify, recreate if you have to. So anyways, if you don't want a policy on your child, then you could use the rider. If you have a policy in place and you're not sure if you have that rider, or if it even exists, again, I do policy reviews. So even if your policy is not with a company I'm contracted through, you can let me look at it. I go through it and I'll break it down for you. It's very simple. Do it for people all the time. They just send me pictures of their policy and their documents, and I tell them, okay, this is what this means, this is what that means, and that way they have an understanding for what they have. Because if you're paying for it, I highly recommend that you understand what it is. Because one day something may happen to you and you can't break it down for them, but at least if you're able to break it down for them while you're still here and able to do so, then now your family knows what you have. Because if you're paying for it, then we need to make sure we get to use it whenever the time comes. So that's all I have for you. I know that was a whole lot and I go so fast. But if you have any more questions, if you want to schedule a quick chat, like I said, my link is in the description. I'm going to go ahead and throw it in the comments too, so it's easy to access. If you want to shoot me a message, send me a DM and I can answer questions for you. We can hop on a quick Zoom and just figure out what fits best for your family and your particular situation at this time in your life. So as always, I'm Kaylee, the teacher of finances, and I hope you guys stay blended and blessed. Thank you for joining in, and thank you for your questions tonight. I appreciate it. And I will see you guys next week on Wednesday at 7 p.m. Central Time. See ya.